This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices regained some ground in Asian trade on Wednesday amid concerns over attacks on shipping in the Red Sea and growing expectations that cuts to U.S. interest rates will take longer than thought. Brent crude futures rose 30 cents or 0.36% to $82.64 a barrel by 0324 GMT, while U.S. West Texas Intermediate crude futures, WTI, were up 26 cents or 0.34% at $77.30. The Brent and WTI contracts fell 1.5% and 1.4% respectively from near three-week highs on Tuesday as the premium for prompt U.S. crude futures to the second-month contract more than doubled to $1.71 a barrel, its widest level in roughly 4 months.
The White House will approve a request from a group of Midwest governors to allow year-round sales of gasoline with higher blends of ethanol, but will push the start date into next year, two sources familiar with discussions said. The decision will likely be bittersweet for the biofuel industry, which wants to expand sales of corn-based ethanol but might be frustrated by the 2025 start date. The one-year delay could put off any potential localized price spikes and supply issues that the oil industry says could arise from the decision until after the U.S. election, the sources said. Under the plan, the administration would grant a 2022 request from the governors of Illinois, Iowa, Minnesota, Missouri, Nebraska, Ohio, South Dakota, and Wisconsin to allow year-round sales of E15, or gasoline with 15% ethanol, starting next year, the sources said.
Moving on to the top news in the energy sector.
Germany will earmark up to €3.53 billion, $3.8 billion, of public funds to procure green hydrogen and its derivatives between 2027 and 2036, the Economy Ministry said on Tuesday, as Berlin bets on the fuel to help decarbonize Europe's biggest economy. The aim of the funding measure is to bring together supply and demand, both in terms of quantities and prices, the ministry said in a statement, adding that money will come from the government's Climate and Transformation Fund. Germany is seeking to expand reliance on hydrogen as a future energy source to cut greenhouse gas emissions for highly polluting industrial sectors that cannot be electrified, such as steel and chemicals, and reduce dependency on imported fossil fuel.
Guyana will delay until 2025 its biggest effort to capitalize on its energy bounty, a $1.9 billion gas-to-power project that was to start this year, using untapped gas to slash electricity costs, a Ministry of Natural Resources consultant said on Tuesday. The rising oil-producing nation relies on imported fuels in its shaky electric grid and has promised to use its oil wealth to construct a 140-mile, 225 kilometers, pipeline, gas processing facility and up to 300-megawatt MW power plant. Winston Brassington, a government consultant involved in the project, said the combined cycle power plant is delayed and full operation will not be possible until the fourth quarter of 2025. Next, we have the top news in metal markets. China's lithium carbonate futures prices rallied on Wednesday on market speculation that operations in a major production hub may face environmental inspections that could lead to output restrictions. The most active July contract on the Guangzhou Futures Exchange ended morning trade 6.35% higher at 99,600 yuan a metric ton after touching an intraday high of 103,000 yuan a ton earlier this session, the highest since January 25. Information provider Shanghai Metals Market, SMM, said in a note that there was market talk that Yichun, a city in the southern province of Jiangxi, will face environmental checks and producers that are unable to properly handle lithium slag may face curbs on their operations.
Copper and gold are expected to see the largest immediate price boost in the commodities sector from potential U.S. Federal Reserve interest rate cuts, analysts at Goldman Sachs said. The immediate price boost from a Fed-driven 100 basis point decline in U.S. two-year rates is the largest for metals, especially copper, 6%, and then gold, 3%, followed by oil, 3%. Goldman Sachs said in a note dated February 20. 3-month copper on the London Metal Exchange was trading near a 3-week high of $8,548 per metric ton as of 0542 GMT on Wednesday, while spot gold was at a near 2-week high at $2,030.30 per ounce.
We will now look at the top news in the agricultural sector.
Brazil's 2023-2024 soybean crop estimate has been reduced to 152.2 million metric tons from the previous estimate of 153.8 million tons, agribusiness consultancy AgroConsult said on Tuesday, citing adverse crop weather in key producing states. AgroConsult, which began a tour of Brazil's main soy-producing regions 33 days ago, said the expedition has so far covered almost 30,000 kilometers, representing 60% of the areas it intends to survey. In Mato Grosso, Brazil's biggest farm state, AgroConsult experts evaluated crops in the north, west, middle north and southeast regions.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.